Hi, this is Ryan Hutchins with Peak Business Valuation. And today I want to chat about the difference between a business and real estate. So, case in point, let me tell you this story. So, we worked with a client a couple weeks ago that owned an assisted living facility. And typically, assisted living facilities, the business owner owns the real estate in which they are currently occupying for the business and the service of assisted living. As such, there's typically two entities. There's the entity that owns the business and the entity that owns the real estate. So when you're looking to sell your assisted living facility, you need to understand one, the value of that real estate, and two, the value of that business. And if you go the route of getting a real estate appraisal to assess the value of the real estate, you need to ensure that that real estate appraiser isn't placing any value on intangible assets. Reason being is those intangible assets, they're not breaking out, they're not digging into, they don't have the qualifications or the credentials to assess what those intangible assets are worth. As such, that's where a business valuation comes into play because we assess the tangible and the intangible assets that are owned by the business. And when we assess the value of an assisted living facility from a business perspective, one of the key things that we have to back out is rent. Because ultimately, if you just think about this hypothetically, if you own that assisted living facility, you're keeping the real estate and you're selling the business to someone else. That means that you are most likely going to create a lease agreement between you as the owner of the real estate and the individual in the business. The individual who bought the business. And so by creating that lease agreement, that means that cash that was once recognized as part of the business and the real estate is now just going straight to the real estate, and there is a separate cash flow associated with the business. As such, when we are performing a business valuation of an assisted living facility, we are going through and assessing what is the cash flow available to the business. And we back out rent expense. Because if we factor in rent expense, then we are taking into consideration a value associated with the real estate. And the real estate was already appraised separately. And so by looking at the value of the business and the cash flow of that business, we're distinctly separating real estate and business value. And it is important whenever you're looking to buy a business that there's a separation of those two values, because they will never be the same. And in more instances where I wish I did not know of, most business owners will double count the real estate income in the cash flow of the business because they don't know otherwise. So for instance, going back to this example earlier about the assisted living facility, that individual basically made a certain amount, I'll change the numbers, let's just say generated about $400,000 in cash flow associated with the business. And the real estate generated, based on kind of what the business paid the real estate holding company, another $500,000. So all in all, $900,000 in cash flow for the real estate and the business. And so this whole entire time we had valued the business, they had a real estate appraisal, and we're chatting with this individual about how we arrived at that value. And they are questioning, well, why aren't you looking at the 900,000? And it simply comes down to the fact that we had already looked at the assessed value of the real estate, and now we're looking at the assessed value of the business. And we have to only look at the cash flow generated by the business for the business. We cannot double dip and take into consideration that $500,000 in rent expense that the business pays in order to get to that 400,000. So a lot of conversations back and forth. But another way to assess kind of how this works is just to think about it from a buyer's perspective. If you're the one selling an assisted living facility, like if you were the one buying the assisted living and you're only buying the business and the seller is retaining the real estate, are you, as the buyer of the business, going to pay more for the business if there's no real estate associated with it? Or are you going to adjust the cash flow of the business in order to arrive at a value for the business only? So just think about it from a buyer's perspective. So, and if you really need to get further clarification, think about the value of the business from a return on investment standpoint. So run different loan scenarios. So a loan just for the value of the business and someone buying the business, and then a loan associated with the real estate. And ultimately, once you take into consideration, okay, this is the cash flow generated by the business, and you subtract out the debt associated with acquiring that business, and then you kind of take into consideration change in working capital and capital expenditure and taxes, like what is your leftover cash flow at the end of the day? And how does that compare to the amount of money I had to put down to get the loan? And you do that exact same exercise, but with real estate. And ultimately, you will come to learn that unless you valued and appraised the real estate and the business correctly, then there's no, like, if they're not done correctly, the return on investment is going to be close to zero for both assets. And so you only make money when you sell, which is not how you buy a business. You buy a business to generate cash flow, to make it a worthwhile opportunity for you, regardless of whether or not you are going to own and operate that business. So I'm going to pause right there. I could go on about this topic forever. But again, my name is Ryan Hutchins with Peak Business Valuation. And if you're looking to buy or sell an assisted living facility, you need to understand the value of that business before transacting. And so give Peak Business Valuation a call at 435-359-2684 or by visiting our website, Peak, P-E-A-K, businessvaluation.com, or by visiting Peak, P-E-A-K, bizval.com. We look forward to chatting with you and working with you and helping you understand the value of your business, regardless of if it has anything to do with assisted living. So we hope you have a great day, and we look forward to chatting with you again.